This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this Market and Economic Update. In this video, we'll discuss the state of corporate earnings, how they have been affected by consumer behavior, and how earnings data impact the overall trajectory of the stock market. Markets have rebounded from the swings experienced at the beginning of August. The S&P 500 is approaching a new all-time high, driven in part by Fed Chair Powell's recent speech, all but confirming a September rate cut. Corporate earnings have been a key focus for investors, with the S&P 500 earnings rising 7.4% over the past year and second quarter earnings growing at 10.9% based on the data so far, on track for the fastest pace since 2021. While 79% of S&P 500 companies have reported better than expected earnings, revenue growth is below the 5-year average, and future sales trends will depend on consumer and business spending patterns. In the next few minutes, we'll discuss how earnings and consumer spending impact the markets and investors' portfolios in the long run. First, this chart shows the S&P 500 index in dark blue alongside its trailing 12-month earnings per share represented by the light blue shaded area. As you can see, though they are not in perfect lockstep, the stock market tends to follow earnings over the long run. When earnings rise, the value per share tends to rise as well, depending on valuation levels. The growth of earnings tends to track economic growth, so a healthy economy can drive stock market growth. So although the stock market and economy are not the same thing, they tend to follow one another over long periods of time. As I like to explain it, understand that when you own a stock, you are an owner of that company. No different than if you owned a local small business like a restaurant. And if you owned a restaurant, the value of that business would go up if more and more people ate at that restaurant. Essentially, the same thing is true with a public stock. In the short run, many things can impact the day-to-day movement of a stock price. But as this chart shows, over the long run, higher earnings lead to higher stock prices. Next, this chart shows the household savings rate as a percentage of disposable income, with the horizontal dotted line showing the average savings rate. After an exceptionally high rate of saving during the pandemic, households are now saving just 3.4% of their disposable income, slightly below the average historical rate. From a financial planning perspective, this is far from ideal. However, from a market perspective, the question is whether this is sustainable. In their recent earnings calls, many companies expressed concern over consumer financial health amid economic volatility and several years of high inflation, with executives from major brands noting the shift to more budget-conscious consumer behavior. Although consumer spending data showed unexceptionally high recent growth, declining savings rates are likely to impact future spending patterns. This will depend on other factors such as larger paychecks and overall consumer net worth. Finally, this chart shows the total net worth of households and nonprofits as reported by the Federal Reserve. It shows that household net worth has reached new record levels, although liabilities have increased as well. Moderating inflation, anticipation of a Fed rate cut, and the current market rebound have all helped to support consumer spending and sentiment through the wealth effect. Healthy corporate earnings growth is also helping to support long-term market performance. A reminder that it's important for investors to focus on broader trends of economic growth rather than day-to-day fluctuations. These are all just touching on the surface of some economic points affecting the market. Our investment philosophy is centered around preparing for the future and not focusing on attempting to predict the future. Proper diversification and financial planning are key factors for investors to focus on regardless of what is happening. We hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, Feel free to download our eye opening white paper titled Busting 7 Risk and Return Myths. You can click the link below or visit our website at dynamicwg.com. You can also email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact based financial decisions.